Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. In our last class, we made a beginning with share capital, right? And debentures. So we are moving from incorporation, then we saw how money is raised through the prospectus, then listing, then now we are coming to share capital. Yesterday we went through the basics of share capital, nature of share capital, types of share capital, DVR, shares carrying differential voting rights, share certificate, dematerialization, etc., etc. We also understood what is the basis of voting rights, etc., etc. And we came here, which is good, and which means we have to start on the core topic, that is what you can do with shares. Kya sakta chahe, what all you can do, karna, what you can do with it. So, for example, reducing, some of you are using the words like reducing capital, reduction, buyback, bonus issue, rights issue. So there are Sara topics which are very, very interesting. And as a finance professional, this background is needed for you. See, even if the rest of the Companies Act is removed from your syllabus, even if the rest of the Companies Act, including incorporation, is removed from your syllabus, certain topics cannot be removed. Share capital and debentures cannot be removed. Dividend cannot be removed. Okay, registration of charges, okay, even that you can remove, yeah, no problem. Dividend cannot be removed. And accounts and auditors, these topics cannot be removed. These four topics, somehow it has to be covered somewhere. If not here, then somewhere. Auditing, we will cover it for you. You will study it somewhere. You cannot avoid reading this. Okay, so why I make this point is this is very essential topic. It's easy to whittle down the syllabus and say this is not needed, that is not needed. But in reality, you will need it if you want to practice as a chartered accountant, or even why practice. If you want to be a corporate, shall we say, finance professional, you will have to learn this. Assuming that a foreign qualification comes to India and they are also permitted. For example, for 1 minute, I assume even there in that syllabus, they will have to have local regulatory laws and regulations. They will have to study whatever, because otherwise, how will you run? See, if you go to US or UK, you will jolly well have to study the local law, right? With regard to finance and all. Same thing here. Okay, so that is what it is. And so I was just waiting for all of you to come in and say good evening and all that. And I see a lot of this. A lot of the regulars are here. Ritik is here. Ishan, Aisha, Bhumika ji, Darshan. It's called Modi Code. I just thought, for the sake of heck of it, I thought I'll wear this. Okay, thank you for that kind compliment, madam. Sushil Kumar Barik ji, welcome. Manav, welcome, sir. Okay, Vishwanath Reddy ji, welcome. Akshay, all of you, whoever is not greeted also, I greet you and welcome you to this session. Manjit Jha asks a very, very interesting question. Can this also be useful for who are going to give the exam in May 24? Baba, this class session is announced for November 23. November 23 exam. Pakka, it will be covered. Don't worry about that. But suppose you're going to write in May 24 and you're still attending, nothing wrong. Kyun? Because see, as I told you, the sections are not going to change. Your syllabus may change. Coverage may change. Even that, I don't think it's changing in law. Law ka coverage. Except that some rules are becoming more important. Some rules are being removed from the Board of Studies material. Which means, by the grace of God, if I'm going to cover classes next time, I will only do one thing. I will not change the slide in a big way. My slides will not change. Believe me. Because they're all based on the section. And the sections are not going to change. And my explanation of the section cannot change. But coverage may be slightly modified now. Some rules may come in, which means I'll include that or delete that. And I will go through the Board of Studies material thoroughly once before I handle sessions for my November 24 exam. May 24 exam. Same thing applies to you, Naja. You got a lot of time for May. You are attending now itself. Good. Listen to it. This knowledge will not be of no use to you. Okay. But with warning, Before you start proper preparation, sometime in say February of 24 for your May exam, and that is enough. Before you do that, my humble request, go through the Institute ka guideline and material, see that you are, and it will be by and large. I can even give you a percentage in my usual style. I say 80-90% of it, no check. 10% this way, that way. Law may, in the new scheme or whatever you call it. Okay. So basically, this is what I would like to say. But, and no knowledge ever goes waste in it. But that is fundamental. No knowledge ever goes waste. Before I go into this topic for the day, let me make one philosophical point. In the 6th chapter of the Bhagavad Gita, Arjuna asked a very, very interesting question. Very interestingly asked. At the end of the 6th chapter, he says, and 6th is a very important chapter because it brings to an end one part of the Tattvamasi, one part. Tvam is getting over. And Bhagavan is going to explain about God, who is God and his own essence. Before that, he wants to clarify that final doubt. Arjuna asked a very nice question. 6 chapters you have told me. You have given me sannyas yoga, you have given me karma yoga, you have given me bhakti yoga, you have told me dhyana yoga. You have given me so many nonsense you have given me, and I am doing all these things. And then I die. What happens? All this is waste now. Next birth, what will happen? I don't know. So Bhagavan says, don't worry. Whatever you learnt in, whatever you did in this birth, nothing will go waste. Beautifully, he says, nothing will go waste. And you will use it in the next. But you will begin where you left off. Very beautiful promise made by Bhagavan. You will begin where you left off. So whatever you do now, do it. Don't avoid doing it is what he's saying. Because, so don't. Wherever you left off, you will start. Your realization will come earlier. This is what Bhagavan says. I know this is an absolutely unnecessary philosophy for CA students. Still, I'm sharing my little bit. But where will Manjit Jha get his answer? Whatever you study now, Baba, it will not go to waste. But everything cannot be the same there. So please take a call, but do listen and attend. In law, only minor changes made. Darshan's authoritatively saying. LLP Act included. I was very much there in that thing. LLP was there in your foundation. It has been kicked up now to, intermediate. And that's not a big deal. LLP Act, inshallah, if I am taking it, I will come and take it. Don't worry, I will teach you LLP. You already studied. See, one beauty is, you would have covered LLP. If you have studied foundation, you would have whatever you call it. I don't know what you call it in CA. ACs, they call it foundation. Here, I don't know, you call it entrance or whatever. When I wrote, it was called entrance. Now, what is it called? I don't know what it is called. CPT, yes, nonsense. Whatever it is, you studied in that, LLP. So, no problem. No, don't worry. Okay? Don't worry. Asochan, anmasocha. Don't worry for that, for which you should not worry. Little about board resolution. Is it same as ordinary? Jasprit ji, there are two types of resolution to begin with. One is meetings passed by members at general meeting. Then you got board resolution. Oh, alag. Don't confuse. This is general meeting mein members will pass. There are two categories. There are only two categories. One is called ordinary. That is, you can say simple majority. Special resolution, special majority. Number of votes cast in favor shall be 3 times the number of votes cast against if any, blah, blah, blah. You have understood that. Board resolution, totally different. That is board meeting. Suppose there are 9 board directors, 11 directors, 3 directors. One man, one vote only. There are no question of one share and all. Because where is the director ka share? He's an individual attending that meeting. If he raises that, one vote. So majority only here. Simple majority only in board resolution. Most of the time board resolution will be unanimous. All the directors will agree. But if there is an argument, if there is a dispute, then majority wins. Majority of the directors present and voting should vote in for board resolution passed. With some one or two exceptions, which you will study when you come to final. So, what happens? So, that's all. So, wherever you hear board resolution, remember, there will be a board meeting. So, you are clear, no? The directors are different from the shareholders. That you know from your fundamental studies. Now, the shareholders are the owners who are owning share capital and all. Directors are the management. They handle the day-to-day management, strategy, complete directional and executional power of the company. They are in charge. The company makes good money, the board of directors is responsible. The company does not do it, they are more powerful than the board. That is why whenever there is something important being done, immediately the law says you can't do it. The board of directors cannot do it. Go to the shareholders. At that point, you should ask. If it's going to go to the shareholders, then you have to ask, is it ordinary resolution or special resolution? If it is whatever it is, as per the act, it means suppose the entire paid up capital, the face value, is not fully called or is not fully paid at the time of allotment or at the time of final allotment of shares. If it is not fully paid, then partly paid shares are there. These partly paid shares, whenever the company wants money, the company has to make calls. Okay, partly paid up shares, partly paid up securities. These are called partly paid up, calls are made. I'm sure this part of it you're quite familiar because right from +2 you have been studying calls in arrears, calls in advance, blah, blah, blah. Calls to be made on uniform basis on all shares in that class. For example, if 7 rupees paid up, 3 rupees uncalled, you have to, if you're calling up 2 rupees to be called upon all shares. You cannot say on one share 3 rupees, another share 2 rupees. No. If you're going to call up 2 rupees per share, everybody has to pay only 2 rupees. So uniform basis, it should be there. A person may pay calls in advance, meaning he can pay money in advance. See, this video buffering thing, you have to bear with it, Jasprit. I'm now announcing now, so the technical person will remember it. If the video is buffering, he will have to do something about it. If it is my problem, he will tell me also. Unless he tells me, I cannot do something. Because sitting here, how do I know whether it is my side or which side? So let us not think. Video buffering, I don't know, is it my fault? Because my connectivity is good. I don't see any problem with my connectivity. If I'm informed, I will change. I don't see any problem in my connectivity. My connectivity is good. So kindly, maybe even inform the technical person. Sir, is it buffering, sir, video? Ashokji, is it buffering? Okay, thank you, sir. Thank you. Sorry to trouble you. So, madam, so you'll have to bear with it, just please. Internet connections are like that in this country. You can't do anything about it. Bear with it. This is one more, I always say in my classes, amongst the Panchabhuta, this is one more no Bhudam has entered, which we have to worship and which we have to placate before we say, so we just like Agni and Vayu and Varuna, we have to also pray to one more guy. Okay, this is the internet guy, God of internet, to whom we have to request, please support me today. Like that. Chalo. Now, calls in advance means, just like, when the calls are made, somebody does not pay the call. It's called calls in arrears. Okay, in which case, you know very well, the shares can be forfeited, reissued, etc., etc. Same way, somebody may pay more than the amount. The company may, if so authorized by its articles. For example, all the shares are 7 rupees paid up. 3 rupees called up, not called up. One fellow says, look here, you take my entire 10 rupees here, take it. That is called calls in. The extra 3 rupees he is paying per share, that is called calls in advance. That calls in advance can be accepted if the company, if it is authorized by its articles. It can accept from any member the whole or part of the amount remaining unpaid on any shares by him, even though it has not been called up. But a member cannot exercise voting rights in respect of the advance payment till it is actually called up. See, suppose a member has, 5 rupees called up share. Everybody has paid 5 rupees. Okay. Let us say 7 rupees 50 paisa called up. Everybody has paid 7 rupees 50 paisa. 10 fellows have not paid 2 rupees 50 paisa. Please understand. They are in arrears, 2 rupees 50 paisa. There is a general meeting of the company. Now, while counting vote, everybody will be taken as one because all of them are paid up to date. So, how many ever shares they have, it will be 1 vote. But for these guys alone, it will be proportionate. So, out of 7.5, they paid only 5 now. So, 5 by 7.5 only they'll have vote. The rest of them will be equal because everybody has to pay. Everybody has paid 5 except these fellows. 7.5 except these fellows. They all have 1 vote. But this guy alone will have only lesser number of votes. How much? He has paid only 5 now. 5 by 7.5 only he'll get. 5 by 7.5, whatever that fraction, number of shares, that many votes only he will get. There is a little bit of a mathematics there. But one beauty is, though theoretically, again, I am explaining this concept of proportionate, in reality, rarely you will find calls and arrears and all that, especially for listed companies. Calls in advance, he cannot vote. If so, then the calls in advance guy cannot say, hey, I paid more now, I will get more. No. He will also get only one vote. He can't get more. Everybody has paid 7.5, you paid 10. Still, you will get only one vote. You cannot get more. Okay. Can a company pay dividends in proportion to the amount paid up? Yes, it can, if so authorized by its articles. In proportion, that is, whatever is the amount paid up on in proportion to that, yes, if so authorized, they can pay. But table F also is there. Because in table F, what they say, if you in table F very clearly they say, where there is calls in advance, if the table F is adopted, table F authorizes payment of interest, not dividend, interest on that extra amount. On the amount received in excess, on the calls in advance portion, table F allows you to pay interest, but not dividend. So, for example, in my example, everybody has paid 7.5. Fellows have not paid for 2.5. To them, they will pay only on 5. Dividend will be paid only on 5 rupees per share. Whereas for the guys who paid 7.5, let us say dividend is 10% dividend, then 7.5 guys will get 75 paisa per share. 75 paisa, 0.75 per share. 10% now. 7 rupees 50 paisa. On that 10%, 0.75 they will get. Whereas these guys who paid only 5 rupees will get only 50 paisa per share. Proportionately you have to pay. That is to be present in articles. Okay. The dividend, later on when you come to dividend, I will repeat this. Dividend is calculated on the face value of the share. If you had some other thoughts or if you are not clear, please get it clarified now in your mind. Dividend is calculated on the face value of the share. Okay. So nominal value 10 rupees, 10 rupees. Nominal value 10 rupees, paid up 5 rupees, and only 5 rupees, not 10 rupees. Only the amount paid up. In case the person has paid calls in advance for the given object, how company want to divert the money to other object and he is not agree? See, this fellow will be a dissenting shareholder. This, if he is not agreeing, then he has to be a dissenting shareholder. Once he is dissenting, exit option is there. So whatever amount he has paid will not be paid. Why it will not be paid? He should be paid. The entire company should refund the amount given. Yes, absolutely. That is how it should be. He wants to go, let him go. Whether he paid in advance or not is not relevant here. Whatever amount paid, he will get it back. Sometimes they might even ask you to pay interest. Okay. Now, issue of shares at the premium, you are all too familiar because you are all experts in accounting. You have taken accounting, what is that? Financial reporting, advanced accounting. You have dissolved it in hydrochloric acid and swallowed it. I mean, you should have, because that is the level of knowledge required for this CA intermediate examination. It's called expert level knowledge. Okay. Expert level knowledge, not your knowledge. I don't know. In those days, it was expert level knowledge. For intermediate itself, in accountancy, it was expert knowledge, expert level knowledge. Okay. So it is far, far, far above your university level knowledge. University level knowledge is only exposure and you should be awareness. That's all. Whereas CA, you should demonstrate expert level knowledge. The expert in that area. Later on, come to final balance. So that at the end of CA exams, if you have cleared CA, you become a professional. That is why. Both levels you have to demonstrate in that subject. Here, no need for expert. In law, no need for expert. Okay. But there you have to demonstrate expert level knowledge. So you would have by now dissolved that subject in hydrochloric acid and dissolved and swallowed it. So I don't want to presume to teach you accountancy. I will far be from me any such intention. Okay. So what all you know, you must be aware is that when a share is issued at a price above its face value, it is called premium. Below, it is called discount. Okay. When it is issued above, it's called premium. That premium amount received, that premium amount, which is the difference between issue price and face value. So issue price 35 rupees, face value 10 rupees, premium 25. That premium received shall be transferred to the securities premium account. Bhumika, I am not aware of it. And you have asked me a very good question for which I am unable to tell you. To my knowledge, it is 12%. To my knowledge, it is 12%. Why don't you do one thing? Since you have raised that query and faculty himself does not know the answer, you look up table F. It is there in table F. Table F is very much available on the net. It's there in the MCA website. And tell me. Okay. Sorry, my mistake. I'm not aware. In fact, I wanted to include, but I forgot to include. So I would have, next time, before sending this, I will correct it and I will send it. But kindly check up and tell me. Just read it and tell me. I'm sorry, my mistake. But when you get the slides, I will give this reference to table F. I will include it here, and with obviously the interest rate and all that. See, that earlier section, there was a clarification given in Ramaya. This is unnecessarily complicated section for no reason at all. 51 is unnecessarily complicated. Table F, all sorts of confusion. Anyway, I will give my view on this along with this. Or don't worry, in my next class, I will tell you. No problem. Okay, wherever there was fine and imprisonment were removed, so do we have to mention that? No. When in my slide, yeah, good point. Again, Kavita Lamsal is asking because I have included in my slide. What happened now? I will remove it next session. I will remove it. It is out. It is gone. As far as you are concerned, ignore it. It is not there. Don't bother with it. If at all that penalty comes, you have to write only fine. Clear, madam? No problem. Thank you, Bhumika ji, for that question. And definitely I will give you further inputs in my next class, which is inshallah on Saturday. I will give you more inputs. In the meantime, if you have free time, do some research also. Okay. So that amount of premium should be credited to the securities premium account. Securities premium account will be treated as if it is part of the paid up share capital. Now, one of the golden rules of company law, you cannot issue dividend out of capital. If you remember that, I will be much obliged to you because it's so easy to forget that you cannot issue dividend out of securities premium account. Securities premium account cannot be used for payment of dividend. It is not a free reserve because free reserve is defined in this act. Later on, I will tell you also. Right now, quickly, free reserve means any reserve which is available for declaration of dividend. Any reserve which is available for declaration of dividend is called free reserve. Therefore, in free reserve account, securities premium will not come. Reserves, it will come. Under the heading reserves and surplus, it will be there. But under the Companies Act, wherever they say paid up capital and free reserves, free reserve this won't come. Which is why in some sections like buyback and all, they will specifically include securities premium. They will specifically include paid up capital, free reserves, securities premium. So because securities premium account is not available for declaring dividend, agreed. So what purposes can securities premium account be used? Only for 5 matters. If you already know this, I'm sorry to waste your time. But if you do not know this, please know it now. In law, this is a very important topic. Many people will forget it. I'm not joking, not students. Even professionals will forget 5 matters. Securities premium may be applied only for these 5, nothing else. Okay. You can use it for, one of the matter is bonus shares. The first matter is you can use securities premium account for issue of unissued shares of the company to the members as fully paid up bonus shares. Unissued shares means if the authorized capital is there, unissued portion will be there. Not that, instead of asking them to give money, you can say, happy news, take it, enjoy. Okay. Giving you as bonus shares. Nothing but capitalization of reserves. More about bonus shares, there's a separate section. Dividend is not issued as securities. Hey, over Varsha. See, I told you now, dividend is calculated only on the face value, nominal value of the share. Where is the nominal value in securities premium account? No problem. No issues. No. Dividend is not. It's part of the paid up permanent capital means it cannot be used for declaring dividend. That is what it means here. It doesn't mean that on that also you have to pay dividend. No. But once you convert it into bonus shares, then on those bonus shares you have to pay dividend. If suppose the bonus shares were issued in the middle of the year, then part of the year you have to proportionately you have to give dividend on those shares. Definitely. But till then, no need to give bonus dividend. No, your question was frankly asked, but think about it. No problem. Because see what I'm telling now, this unfortunate thinking thing now, it's very important in CA exam. Okay. Gone are the university days. Or if you have not studied in college, thanks to some coaching academy who made you not go to college and all, then that approach also cannot work. That college approach cannot work. Okay, this is well known. Everybody knows that securities premium account can be used for bonus shares. What are the other matters? In writing of preliminary expenses. See, before incorporation, expenses may be incurred for incorporating the company, fees paid to auditors, company secretary, lawyer, all the fellows come and stand with their palms open. Give me. You pay everybody. All that legal expenses, printing and stationery, blah, project preparation, everything is called preliminary. Once the company comes into existence, the company will authorize the preliminary expenses and reimburse the directors. Okay. Now, those preliminary expenses will be debited. You can't take it to P&L because it is capital in nature. So it will be coming as a negative item under reserves and surplus. Preliminary expenses, losses. If in any year it is loss for the year, then that after all adjustments will go to reserves and surplus liability side, negative item. Okay. So that item, if I want to take it off the balance sheet, I can do so by reversing it against securities premium. So debit securities premium, credit preliminary, sort of cosmetic activity. That's all, nothing else. Number-wise balance sheet total will be the same, but representationally it will go off. Yeah. In writing off expenses, one thing, Bhumika, I don't understand. This slide is in front of your eyes. And I'm teaching you, but you are giving me one answer, which is wrong. Okay. See, at least I did not know something, my ignorance, because it's there, table F. I read table F. See, the beauty is for taking classes now, I read table F, I took notes, but because of certain other commitments, I forgot to amend this slide. I was also reminding myself, hey, amend this slide before we go. So I forgot. Now, you have given one answer, Bhumika ji. I want you to correct it. This is exactly the type of mistake I don't want you to make. Okay, so Aram se come with me one by one. In writing off expenses of, I explained preliminary. Now, we already saw, at the time of public issue, we will be paying underwriting commission or we may be paying broker commission. And in one or two cases, we may allow discount on shares and discount on debentures. Meaning, at the time of issue of the debentures or preference shares, I may issue at not preference shares, debentures. Shares cannot be issued at a discount. We'll be seeing that later. So, but with one or two exceptions, whatever it is, any discount on issue or commission paid at the time of issue of shares or debentures, again, cannot be taken to P&L account. It has to go to balance sheet. Maybe these items from the balance sheet, what you can do, you can write it off over 10 years or lifetime of the security. Suppose the debentures are redeemable in 5 years, you can write off this commission or discount over 5 years. Applying matching concept, you can do that. But suppose you want to do it in one shot, if you got securities premium in the balance sheet, straight away you adjust this off. Clean up the balance sheet. Also, sometimes at the time of redemption of preference shares or debentures, you may pay a premium. That premium which is payable or paid on the redemption of any redeemable preference shares or any debentures can be written off using securities premium account. Lastly, securities premium account can be used for the purchase of its own shares or other securities, that is for buyback. Now, Ms. Bhumika, tell me where you have gone wrong in this. Go through your own query pad point and tell me which you have mentioned here that is not in this list. Boss Darshan, I already told you, with regard to financial reporting, you have dissolved hydrochloric acid and swallowed. So if it is not done in accounting standard, then please follow the accounting standard. Inform the Ministry of Corporate Affairs that Section 52 is contradicting the accounting standard. That's all. What else I can do? You tell me. I am teaching you Section 52. Take it or leave it. See, let us say that accounting standards do not, see one more thing, accounting standard is a guide for presentation of accounts, right? So, while I appreciate your knowledge and your willingness to compare and contrast subjects and all that, don't overdo it is all I would humbly suggest in your own interest. Okay? Right now we are studying Section 52. And accounting standards have no power to prohibit the act. Please remember, because accounting standards is being proposed by who? We are going to see that later on in accounts, by NACAS. So, the National Accounting Standards Board, that cannot contradict the BARAT or MCM. Maybe you have misunderstood the wordings. Maybe it's more of a disclosure and all. So, you can check out whether, what is it? I will also make some study in this and I will try to understand and get back to you. Okay. Or if you have a real doubt, you ask me in LinkedIn or somewhere, I will clarify it for you. Okay. So, no problem. Whatever it is, I think you not only forgot about premium, you have mentioned redemption of preference shares. You have mentioned redemption of preference shares. But madam, redemption of preference shares, you cannot use securities premium account. Please note it somewhere because this could be relevant to you in accounting also. The securities premium account cannot be used for redemption of preference shares. See, later on we'll be seeing preference shares can be redeemed only out of reserves. Okay, or proceeds of a fresh issue. While calculating reserves, securities cannot be taken. Buyback you can use, but not for redemption of preference shares. Because redemption of preference shares can be made only out of profits earned by the company through its business. Only out of revenue profits accumulated as reserves. You cannot use securities premium account for redeeming preference shares. Got it? Good. Premium, if you're paying on redemption, you can write off. Okay. Now, certain unlisted companies, private companies, and listed companies subject to SEBI may apply securities premium account in paying. See, I don't know why they're given, because these ABC items are again there only for the purpose of what are here only is CROs, bonus shares, commission or discount allowed, and purchase. You can do. I don't know what this rule 3. See, there if you ask me now, I'm surprised by what they are trying to say in this rule 3. Because anyway, 52 is giving you permission. Here maybe they are only saying listed companies will be subject to SEBI regulations. Okay, that's what they are saying. Can professional fees can be reimbursed from securities premium? No, you're confusing. That is the problem. You ask your doubt correctly. I told you that you have to pay auditor's fees, you have to pay lawyer fees and all. You are asking like that. Don't ask like that, Keshav. After the fees is paid to the auditor, after the fees is paid to the lawyer, it comes under which heading? Preliminary expenses. Capital item. That entire lump item, where it will go? It has to go to the P&L account. It has to go to the balance sheet. Now, today with Ind AS, what happens now? This whole balance sheet culture is gone. As I think that's what Darshan is trying to say. Everything has to be written off into the P&L account straight away. Okay. But if you're doing that, then you can't do it in securities premium account. But obviously, fees paid to auditor and professionals cannot be adjusted against securities premium account. To answer your straight question straight, but you are asking it from a confused mind. That is what I'm worried. I mentioned that fees is paid to professionals, but you conveniently did not listen when I said that amount will go into preliminary expenses. And that preliminary expenses can be written off by using securities premium account. If that is your doubt, I have clarified that also. Or on the face of it, if you are asking this doubt, I'm giving you no. What nonsense. Only these 5 matters can be, securities premium can be used only for these 5. Only for this 5. Sirf a panch ke liye. No, nothing else. Okay. So whatever you have stated is not here. Therefore, it cannot be done. If you now have some argumentative question, go to that. Sir, you told preliminary expenses. Yes. Once you give that Namakaranam preliminary expenses, then once it gets lumped and goes to balance sheet, from there you can remove it by adjusting it against securities premium. Okay. No, nothing wrong. See, the problem with doubts is ask that, you know how much intelligence is needed to ask a doubt properly. Think about it. Only highly intelligent students will ask beautiful doubts. But when student asks a doubt, now the faculty has to think 100 times, where is this gentleman confused? What did I say by which this gentleman is getting confused? Oh, I said professional fees. Immediately that man is becoming very, hey, professional fees, how it can be now? It cannot be, Bha. I agree with you totally. But when it goes into preliminary expenses, it can be. You are absolutely correct about that. Companies complying with accounting standards, only these 3 are allowed. You are absolutely correct. Okay. You are absolutely correct. Till date, I have not understood the meaning of that. Till date, I have not understood the meaning of that. What they mean by companies complying with accounting standards. I don't know, because this is there in the BARAC. Okay. So, and all companies have to comply with accounting standards. Where is the question of not complying with accounting standards? Because if a company does not comply with accounting standards, how I can say one of the most stupidest thing I have ever known. See, why then provide here? Why contradict yourself? Seriously. That is one of the reasons why I hate teaching this subject. See, when logic doesn't prevail, one fellow passes one rule, another guy does something else. Nobody bothers to reconcile. No. Thank you for that clarification, Darshan. I'm with you totally. So those companies which are following the accounting standards, only A, what is that? C and E. Okay. See, one more thing I'll tell you. 95% of the time it will be A. Okay. 60% of the time it will be A. Another 30% it will be E. Balance, those companies which have written off preliminary expenses and this premium payable and all that out of securities premium will be rare. Will be rare. Many companies would write off this preliminary expenses, commission paid and all in the P&L account itself. They will write it off in the P&L account itself. Okay. Preliminary expenses are all expenses incurred before the no. Preliminary, see, there are 2 points here. Before incorporation, before commencement. Before incorporation is called preliminary. Before incorporation, before the company comes into existence. See, before the child is born, father has to do a lot of expenses now. But after the child is born, father has to go and say, on your behalf, I spent. So that company, once it comes into existence, through its board of directors, it will take what all expenses incurred before it was born. That is date of incorporation. After incorporation, till commencement of business, company cannot have any financial dealings. So those contracts are called preliminary expenses. They are actually, see, those contracts which are entered into before incorporation are called pre-incorporation. After incorporation, between commencement of business, any contract entered into, if the company is not allowed to commence business, that contract cannot be enforced. Okay, so if any contract entered into in that period is a dangerous contract. Don't go there now. It's not part of your syllabus here. Preliminary means in expenses incurred before the company is incorporated itself, before incorporation. Okay. Now, See, this is your so-called rule 3. Till date, I have not understood. Okay, what they are trying to do. Then why give here and then take away here? Maybe God, Ministry of Capital Affairs, what to do? See, subject should be clear. Why confuse? Why he give one thing here? Why give one thing there? Huh? Confusion. Vaishali Bindalji, what have you written? Pre-X earlier off by PL, but now by only sec pre because direct effect on profit. Yeah, that is exactly what I said. Earlier off by PL, but now by only sec pre, securities premium. Okay, because direct effect on profit. Okay, agreed. Agreed. Wow. Madam, all this in abbreviation stuff, don't try in the exam. You imagine the poor examiner. For me, it took 2 times to read to understand what you've written. Madam, you are having laptop or whatever. Little bit more you type now. What is there? Abbreviation, don't try. I'm not a great fan of abbreviations. Unless, you abbreviate as acronyms. You can use abbreviation in the exam. For example, differential voting right, DVR. Now, what you need to do, one place in your answer, you write differential, D capital, voting, V capital, rights, R capital. Within bracket, you write DVR. Then, throughout your answer, you can use DVR. It is allowed. Because once you have clearly told the examiner, whenever I am saying DVR, I am referring to differential voting ratios. Nothing wrong in abbreviating. Please, if you see newspaper reports in Hindu or Business Line, they will abbreviate. But believe me, or in any good magazine, decently edited magazine by people who know what is English language, what they will do, they will use acronyms and abbreviations. But that abbreviation will be clearly, full form will be given in the beginning, first time, at its first usage. Thereafter, abbreviation is allowed. But otherwise, do not think. Nothing. See, abbreviation does not confuse. It wastes time. 1, 2. It is not about Srikanth. It is about you. If you use such crazy abbreviations in the exam, even though your answer is correct, what will understand from it? See, from what has been written now, my understanding is very much less. If Vaishal Bindal can write it again in good English, and so that, don't address it to Srikanth. Imagine that there is a person who cannot understand the subject at all. That man should understand. Sorry to continue on this foolish thought, but you might even clear the exam and become a CA. Thereafter, what will happen? You will be a professional, but you will be dealing with so many non-accounting people. All your emails will be like this only. That they will not understand head or tail of what you are talking. Imagine a senior chartered accountant is finding it difficult to understand what has been written. Imagine the poor purchase manager or the poor marketing manager, how he will feel, what he will. So, the way we write, this will, you later on after finishing intermediate, don't worry, we will push you through MCS now. But I thought now itself I'll make it important to you. This is also very important for your exam also. So don't think that I'm wasting your time, Vaishaliji. I know you, from your OKK itself, I know that you are angry. Okay, that is another big thing. Okay, or okay. Why okay? Maybe I am Buddha ho gaya, that may be reason, but still, because we were also young once upon a time. When I was young also, I wrote good English. When I was 19 years old, I wrote grammatical English. Sorry, that is why I became old very young, unlike, but seriously, young or old is not in your language. Okay, young or old is in your attitude. Okay, today I am 57. I've got goals for me for 10-year goals. I've got 5-year goals. I have a lot of aspirations. I want to do so many things in my life. That is being young, not in the language we use or the abbreviations that we use. That doesn't make you young. Your heart makes you young. Okay, however, when I was 19 also, I was serious. I wrote full sentences. I wrote good English. When I'm 57 also, I write the same way. Okay, but my young or old is not in the language. Don't think this is a generation gap. Okay, no. Generation gap, you should fill it fast. and become senior, because you are aspiring to become members of my institute. So the general maturity level for CA students should be 3 times above the average college student. Then only this course you can complete it with flying colors. That's all I'm trying to tell you. The general maturity, which means if you've got average college student, they talk in loose English, their WhatsApp messaging and all, they should be 3 levels below you. You should be a CA student, you should be 3 levels above those donkeys who are sending WhatsApp message, KK, YU, TKS. Anyway, for your personal messaging, okay, ma. See, if you're sending it to your friends, if you're sending it to your those and all, that's okay. But when you're communicating with senior people, when you're communicating officially with your colleagues, you have to be a little formal. This something you might want to pick up very fast. Later on, when you get into articles, it's going to be a problem for you. Because your partner may be my age now or little less, 43, 44. Think about it. You'll have to interact with senior people. So just like it is necessary for old people to understand youngsters, when we were young, we took a lot of effort to understand our seniors. That is why we became successful in our life. Not by expecting the senior to understand me. We took extraordinary effort to understand the senior's mindset, align to it, get his good name, and go on with our life. Okay, rather than expect him, I am a millennial, try to understand me. I am a whatever non-coronial, try to understand me. Yeah, you try to understand the senior, Baba. See, remember, that guy has spent 35 solid years in the profession. You mean to say he may not know anything at all? So try to understand him. You learn more. This is my view. Of course, I'm expressing it more out of concern for you. Don't think that. I think, no, angry. That OKK always. Don't use OKK with me at least. Because my wife wantedly, she will use OKK. Because she knows I'll get irritated by it. I tell her, don't use OKK. What is that OKK? That is, it's a lazy English, lazy attitude to language. And I know I'm being very boring and I know I'm being very, my age, 57. It's not that. 19-year-old Srikanth used to talk like this. So Srikanth has not changed. 19-year-old Srikanth was serious. Okay. That seriousness you need to have in our life. Don't worry about it. That will always be of use to you somewhere. Don't worry about it. Okay. Hey, when I want to let down my hair, relax and enjoy, nobody can enjoy better than me. But that is private. When I'm communicating officially, that is totally different. When I'm writing as partner Karpukam Krishna Natarajan, if I send a mail to the client, that will be the last word on it. After that, there cannot be any further. If I'm sending a mail to the income tax department, it's my final submission on a particular matter. Every word will be measured. Every sentence will be carefully written. Yeah, I will put one nail after another on his coffin, so that even if he reads it, he will understand what I have written. He will do what I want. Otherwise, on an appeal, the CAT appeals immediately will say, "Hey, you mentioned everything, man. Why that Buddha has not understood? Kya karna hai, sab? Now you please give me justice. I will get my appeal win." So this is the level of seriousness I'm talking about with regard to language. So don't take it as a casual thing. That's all I'm saying. Just like, when we study mathematics, you cannot get a wrong answer there. If a mathematically oriented student, I write some nonsense that say that is math, so you say, hey, it's not tallying, man. How can you? Same way with language also. So use of language is very important. Sorry about my unnecessary lecture. Unnecessary, whatever, maybe, but then suddenly in the exam hall or suddenly it will come to you. Hey, that day that fellow told I have to improve my English. I have to concentrate on how I use words and all. That fellow told you, I wish I had listened. Like that, it should not happen to you. So start doing it now itself. When it is still day, when you still have, you're not written your exam. Now is the time to improve. Okay, after that, what is the use? Okay. In Tamil Nadu, we say, after becoming blind, what is the point in doing Surya Namaskar? What is the point in doing Surya Namaskar? Beforehand, you should do it. Okay. Now, coming to this point. Shares cannot be issued at a discount. Okay? Because the minute you issue shares at a discount, what you are doing? In effect, you are giving upfront dividend. Na? He is supposed to give you 100 rupees. Instead of giving 100, you say, you give me 90. 10 rupees you take. Later on, when the winding up, I will give you back 100. That means what? Straight away, if you look at cash flow wise, current outflow is 90. At the time of winding up, he'll get 100. Which means straight away 10 rupees, we are giving him dividend upfront. So they say, no, you cannot issue shares at a discount. Because if you issue at a discount, it will affect the creditors. Because here, see, from the creditor, you took 100 rupees, you will repay only 100 rupees. Whereas from the shareholder, you're getting 90 rupees and you will repay 100. So that amounts to giving him dividend. They're out of capital, not allowed. Therefore, the general rule is that a company shall not issue shares at a discount. Any share issued by a company at a discount price shall be void. Void means what? Money raised should be refunded. You cannot keep that money. You cannot use it. But two exceptions are there. Two exceptions when shares can be issued at a discount. This is one exception. See, sometimes there may be a creditor, where you've gone for a debt restructuring scheme. Maybe through part of insolvency proceedings, you also went through the RBI, the Reserve Bank of India. Maybe it was a financial institution, banks, consortium, whatever. Finally, you have cobbled together a debt restructuring scheme on the basis of which these guys are now saying, hey, you borrowed from us 100 crore. You paid something, blah, blah, blah. Finally, now, principal, you are due 60 crore. Interest, you are due 70 crore. Yeah, accumulated interest is there. Compound interest, penal interest. Now, what we will do? We will give you a restructuring scheme. Principal, you are owing 70, 60. That I can't touch. Please, don't ask me to put hair. That's called haircut. You might have heard this term haircut, na? State Bank of India took a haircut. Canara Bank took a haircut. What? This is the haircut. So, but that interest is 70, we will rework it, ma. We will do simple interest calculation, rework it. Finally, we will bring it down to 30 crore. So, 60 plus 70, 130. Finally, we will say 1 crore. 100 crore. Pay it to me. I will release your security. Enjoy your life. No more debt. So let's go for it. And that also 100 crore, don't pay in one shot. I'll give you 5 years time to restructure it. You pay from then onwards, at least you pay interest to me. Okay, otherwise, no, too much. Whatever it is, when you're going for a debt restructuring scheme, the company may come out and say, I can't pay that 100 crore also. So finally, the bank will say, hey, what are you going to do then? No, what I will do, I will allot equity shares or I will allot preference shares for that. In other words, the company is now saying shares will be issued to the creditors when the debt is converted into shares. So instead of even keeping it as a loan, we are saying we'll convert it into equity or ideally preference shares, which will be redeemed after say 5 years or 7 years or whatever. No problem. So bank says, agreed, sir. At least some face saving. I will at least show to my shareholders that I have not lost that money. And please pay the dividend on the preference share correctly, whatever. So now we are going for conversion of amount due to creditors to shares. At that time, think about it. This fellow was due 130 crores. He has now come to 100 crores. That too, he is now converting it into riskier instrument, riskier security. From debt security is going to shares, preference shares, or whatever, or equity and whatever. He says, see, my dear friend, do something for me, help me. So there the law says, okay, issue the shares at a discount, which means 100 crores. If I'm allotting shares at 10 rupees face value, 100 crore divided by 10, now he says, no, make it 9 rupees. Give him a discount of 1 rupee. So now 100 crore will be divided by 9, which means they will get more shares. That compensation for any interest that they have lost. So shares may be issued at a discount to creditors, provided that that issue of shares for creditors, conversion of debt into shares should be in pursuance of a statutory resolution plan. Okay, under the insolvency board, or you go to the Reserve Bank of India, apply, is the procedure for that, go for a debt restructuring scheme. Once it is approved by the Reserve Bank of India, under that scheme, you can issue shares at a discount. The logic is, this is for the interest that they are foregoing. Okay. So for that, to compensate them. Yeah. Correct. See, Vodafone Idea converted its debt into equity. I don't know. Please note, you should be converting debt into shares under a statutory resolution plan or a debt restructuring scheme. Now, most of these statutory resolution plan or debt restructuring schemes are available only for financial institution, nationalized banks, like that. It is not available to others. So, basically, debt restructuring, that's all. Under the debt restructuring scheme approved by the Reserve Bank of India, right? Only one rare exception. Otherwise, shares cannot be issued at a discount. Do not take this one single exception and extrapolate it and waste your time. This is a rare occurrence. It will happen only for a loss-making company. So no company should be proud that it is going through this exception. It is a shame because the company has heavy losses. They have got huge debt. Then only they will go for debt restructuring scheme. The revival scheme, basically, the fellow has become sick. We are trying to revive him. Such cases only will go under this scheme. So proper profitable companies will prefer not to go through this route. One more situation is there where shares can be issued at a discount. That is, when I come to that, again, I will repeat it. But now I will just mention it. You can make a note somewhere for you. Sweat equity shares. I'll be coming to that in this topic. When a company is issuing sweat equity shares, okay, those sweat equity shares can be issued at a discount. So make a note somewhere, sweat equity share can be issued at discount. When we come to sweat equity shares, you'll know more about it. What is a sweat equity share? To whom it is allotted? For what purpose it is allotted? What is sweat equity share? To whom it is allotted? For what purpose? I will tell you when you come to that part. In case you do not comply with 53, then company and every officer shall pay penalty equal to the amount raised through issue of shares at a discount or for 5 lakhs, whichever is less. Okay, you might have one more question. Sir, company and every officer. Suppose the company is having 10 officers. Company. So each person will pay 5 lakhs or together 5 lakhs. I will tell you, each person will pay 5 lakhs. Okay, company 5 lakhs, then every officer 5 lakhs. MD, whole-time director, company secretary, CFO, CEO, you name it, that fellow will have to pay the penalty. Boss, if you think I'm so happy about it, you're the way you talk, Darshan, instead of wasting your time writing this exam and all, I will recommend to the institute to directly give you CA certificate. Study, Baba. Okay. See, Darshan, don't mistake me. I have seen many students who are very brilliant in the class. They will give so many brilliant answers in the class. They will advise the faculty on what is the law and all. But the real test is where? Think. There, be careful. Over assurance is also dangerous in CA Institute. Okay. Yeah. So I'm not trying to frighten you, Darshan, but be careful. Sometimes students who think I know everything, I know that I know everything I know, they keep educating the faculty. Now, faculty becomes worried about that student because this boy is a nice boy. I wish he will in the exam hall, he'll be calm. He will remember the subject, what he studied properly and write it and get at least 55-60% in the exam. Okay, so that is the goal. So be careful, Darshan. Just read the subject, that is enough. When you are issuing, when you have issued shares at a discount, there is a penalty, no doubt. Also, in addition to the penalty, the company shall also be liable to refund all monies received with interest at the rate of 12% per annum from the date of issue of such shares to the persons to whom such shares have been issued. Okay. Now we come to sweat equity shares. See, sweat equity shares are provided in two places. One is here in section 54 of the Companies Act, wherein they talk about sweat equity shares. That is the base for all companies, section 54. For listed companies, you will ignore MCA guideline rules you will have to go for SEBI guidelines. So SEBI guidelines slightly will be tougher and different from MCA. Should you know SEBI guideline for CA exam for this paper? No, no need. Don't worry. Don't confuse. Okay, don't worry. It is not needed. Yeah, MCA would be very rich by these penalties. That is why I will tell you, now that you've taken this matter, I will tell you one more thing. Long ago, in 90s, there was no Ministry of Corporate Affairs. Pre-liberalization, no Ministry of Corporate Affairs. Post-liberalization, even after liberalization for 3 to 4 years, the ministry, so-called ministry, was at that time a department. It was a Department of Corporate Affairs, and it was part of the Ministry of Finance. So at that time, they came out with an amnesty scheme by which any company which has not filed its annual return, etc., could file in one shot without fees or very low fees and go ahead with that. Even that fees was substantially high. Or they could go for a defunct company. They could write off the name of the company and thereby save themselves from penalty. It was called amnesty scheme. When that amnesty scheme came, people started, coming out of all companies started. So many companies they came. They paid huge fees for closing because many people would form a company, not know what to do with it. Now the opportunity has come. Every time they go to the auditor, every year the fees will only go up. It won't come down. One man will come and say, Mr. Srikanth, I want to comply with the law. Comply. So what I should do now? File the annual return, file the balance sheet. Sir, how much cost? All told this is how it is. Ministry department DCA fees is so much, annual return fees so much, balance sheet fees so much. In addition to that, for me, if you go to the cemetery, the grave digger has to be paid now. Just because it is a tragic event for you, the grave digger has to be paid, yeah. In Tamil we call Vettiyan. You have to pay him. So I have to be paid. Company secretary has to be paid, etc., etc., etc. So what to do? How much is it? It comes to 2.5 lakhs. Okay, I'll come back to you tomorrow. That's all matter gone. Now when the amnesty scheme came, all of them came running. Srikanth, you should have advised us. I said, 2 minutes. Today only it was announced in the newspaper. You have read it. I have not read it. That is all. We will do it. What do you want? So we did it. Huge amounts were paid to the department. Then only the Ministry of Finance realized, hey, we thought that this fellow was, I'm sorry, it was not under the Ministry of Finance. Hey, it was under the Ministry of Law and Justice. Correct. The Department of Company Affairs came under the Ministry of Law and Justice, which is a expenditure ministry. See, the Ministry of Law and Justice is not a revenue ministry. They generate some fees and all that, but that is not enough to pay even the judge's salary. All that is coming out of budget allocation only, which is coming out of revenue functions like income tax, GST and all. So GST and income tax will come under Ministry of Finance because they are revenue function. Right? That's why they are called Internal Revenue Service. Now this fellow, this Department of Company Affairs sitting in Ministry of Law and Justice was earning money. Immediately the Minister of Finance saw this. Hey, as Darshan rightly said, they are becoming rich. And if that fellow has got money, then he should not be in Law and Justice. He should come to me. So immediately they pulled that department to Ministry of Finance. Once they came into the Ministry of Finance, they carved out a separate ministry and put it under the Ministry of Corporate Affairs. Okay, even though there will be some named Minister of Corporate Affairs sitting there, that fellow will be only dummy piece. The entire control will be with the Finance Minister only. He cannot do anything without consulting the Ministry of Finance, Finance Ministry. Finance Minister will control everything. Okay. So it's for information, since you asked, since money is involved. Yeah. These people collect a lot of money. They collect more money than their expenditure. They actually contribute. Good. That's absolutely correct. Now, coming to the sweat equity shares. Sweat equity means equity shares which are issued by a company to its directors or employees. See, literally, when the employees are working, sometimes, they will be sweating. So he has given his sweat to that company. Directors also, in some cases, may give some valuable know-how, etc. to the company. So these people, the company will want to reward. Now, while doing so, they may allot shares to them. Instead of just giving them money, they might say, we will give you shares. Because, think about it. company like Infosys or Maruti, even if you get some shares at a discount or whatever, that will be much more, much worth in the long run, right? So issue of shares to these directors or employees is called sweat equity. Such shares can be issued at a discount or for consideration other than cash. Meaning, such shares can be issued at, say, face value 10 rupees share, can be issued at 8 rupees, like that. Or, please note this point. Suppose the company ka share is quoted at 725 rupees. Face value 10 rupees. 725. That means what? 715 rupees premium. 10 rupees is the nominal. Now there, suppose the company is giving these shares, they are allotting fresh shares, which are listed in the stock, which are listed and quoted at 725. I am giving this to him at 500 rupees. That is not discount. That is not discount. Because 10 rupees share is being given at full 10 rupees only now. Any amount of reduction in the face value only is called a discount. The difference is only premium. We are issuing shares at a premium, except that we are not collecting the fair value of the share. The shares are being issued below their fair value. That is different. In those cases, the difference, if I'm allotting at 500, 490 premium, 10 rupees nominal value. But suppose I am allotting shares to this guy, 10 rupee face value, he is paying only 8 rupees. That is called discount. Also, instead of giving money, we can say, hey, you don't have to give me money. You give me some valuable know-how. For example, there may be a director who is also a scientist. That scientist is having a patent. Now, instead of buying the patent, we go to him and say, so-and-so professor, we know you got the latest research has done. Yes, almost published. No, I've published and I've got a patent. Oh, really? Now the value goes up. So they see everything and they examine, they satisfied. Then they say he is the owner of the patent. They say, can you assign that patent to us? Yeah, I will assign. No problem. I'm expecting 45 crores. Then the negotiation starts. Then finally we say, boss, at that moment, we don't want to give you the entire 30 crores final value agree. We'll give you 10 crores money. Balance 20 crores we'll give you as shares for other than cash. So once the 20 crore shares are allotted and 10 crore money is given to you, kindly assign the patent to the company. You become the director also. So, or rather we make him a director. And then, so we allot sweat equity shares to a director for intellectual property rights. In the case of an employee, it may not be IPR. It may be value addition. I'll give a simple example. One of the employees, the workers, he discovers that raw material can be used more effectively by slightly making change in the machine settings or slightly modifying the composition of the chemicals. Then he comes to the management and says, this is what I feel. So the management starts doing experimenting and they find, yeah, what he says is correct. Raw material composition, we can high value component, we can reduce it a little bit without impairing on quality. So now the saving for the company on an annual basis may be in crores. Obviously, this guy has done it during his employment, so he cannot claim any right. But still, for sweat, for his, we'll say, okay, we will reward you, we will give you shares. So that is also called value addition. So employee or director may provide know-how or rights in the nature of intellectual property rights. Like I told you, patent is an intellectual property right by the scientist. He is not going to assign it to us. That is called transfer. Then value addition, I gave an example. Employee may not do something great, but it may save money for us. That is called value addition. So value addition, actual or anticipated economic benefits, means reduction in cost is an economic benefit now. Reduction in cost of raw material through better usage is an economic benefit. Okay, from derived or to be derived by the company from an expert or a professional for providing know-how or making available rights in the nature of intellectual property rights. Consideration for value addition not to be paid or included in the normal remuneration paid. So in addition to his normal remuneration, because see, after all, we can always say, hey, whatever you did during working hours. I paid salary. For this only I paid salary. But that will be a cheap behavior. So in addition to his salary, we are going to give him shares. Not in lieu. This should be in addition. His normal salary will be paid. In addition to that, we are going to give him shares. Normally, sweat equity shares, if you are giving it to him at a discount below the fair value, the difference, would be taxable in his hands. One. More importantly, the amount that we are giving now would be treated as employee compensation. It will go under the head employee, but not part of his salary, in addition to his normal remuneration. Employee here means permanent employee of the company who has been working in India or outside India. A director of the company, whether a whole-time director or not, even a part-time director can be given sweat equity shares. An employee or a director, as defined in subclauses A or B above, of a subsidiary in India or outside India, or of a holding company of the company. So, many technology companies have foreign subsidiaries. Now, this guy may be working in the foreign subsidiary, or a foreign company may have an Indian subsidiary. Whatever it is, he becomes an employee. So, an employee of the foreign holding company, may be given sweat equity shares in the Indian subsidiary. I'm repeating, an employee of the foreign holding company can be given sweat equity shares in the Indian subsidiary. Darshanji, you have understood now. In this case, which type of director or employee will get sweat equity share? Only those people who have provided know-how or making available rights. Now, how can I then give uniformly? You tell me. How can I give uniformly? Boss, I'm employing lakhs of people, All of them may not be brilliant now. Some of them only capable of coming in the morning at 9:30, drinking tea at 11:30, doing some nonsense job. Whatever job he has been told he will do, in the evening go back home. Such fellow, how he will provide know-how? How he can claim sweat equity shares? But ESOP, once you go for an employee stock option, ESOP, there it is a totally different thing. In ESOP, your question I will answer differently. ESOP should be issued uniformly. Again, you are using the word option of sweat equity shares. I don't know what meaning you are giving to the word option. Because sweat equity shares, there is no option. It's a contract. Or we are giving him a letter of appreciation. Along with that, we are saying, because of this, we are giving you shares. You don't have to pay a pie for the already given value addition. We are giving you these shares for consideration other than cash also. Or we can give it for cash also. For some employees, we can say, look here, you guys are all done a good job. That's a team. Above the price, we will give you extra 5% or something. They would have to. That 5% you have earned now. For that, we will give you shares. But not at the free, but we will give it to you at a slightly lower than the market price. Take it. But there is no option. Option is totally different term. It is a totally different term. We'll come to that later. Point D. Where is point D? Can you note down the numbers and tell me? Point D. Yeah, sorry. This is D. Sorry. Will those 3 points of exceptions where we can issue shares to subsidiary apply? Yeah, see, an Indian subsidiary of a foreign holding company, the foreign employee can get. Or suppose the employee is an employee of the Indian company, then Indian holding company, then he can be issued allotted shares in the subsidiary, abroad, foreign subsidiary also. So the employee or director may be employers or a director in the subsidiary in India or outside India, or of any holding company of the company. See, the word option because employee stock option, it is a clear option where in employee stock option scheme, the employee will not be given shares. He will have to pay 1 rupee and get option. So each option will be 1 rupee. That is called original ESOP. Then at any time during the exercise period, the employee can ask the company to allot the shares as per the ESOP terms. He will exercise his option. That's called exercise period. So this is there only for ESOPs. In sweat equity, no such option, etc. is there. It is like we make an offer. He may accept it. He may not accept it. That is all. So I know you are a highly intelligent person, but be careful. The word option has to be used very, very carefully. Okay. Yeah, I am making an offer to you, Baba. I'm saying you did a good job. I want to reward you. I want to give you shares. In case you are interested, kindly tell us within 30 days. In case we don't hear from you, bye. Then that is not option. Option is totally different. Option is the right to buy or not to buy a certain share or a certain security or any asset. Okay. I'm sure you would have studied this in your finance. Options. So sweat equity, don't use the word option. There is no option there. This is a straight decision of the company to allot. The guy doesn't want it, doesn't want it. That's all. That too, it will be there only in those cases where we are giving him shares for which he has to pay money, but that again will be below the market price. Directors, though not employees, sometimes provide intellectual rights. Can they be allotted? Yes, this is exactly for them only we are giving this option, this sweat equity share. Yeah. Directors, I gave an example of that professor or the guy who's got a patent. We make him a director, then allot sweat equity shares to him and pay him 10 crore. Exactly. That is exactly the purpose of sweat equity shares. Okay. So shares to be of a class already issued, authorization by special resolution, listed company to comply with SEBI regulations, other companies with Rule 8, sweat equity shares to rank pari passu with other equity shares. Pari passu means with equal rank or with equal right. So sweat equity shares will be treated at par with other equity shares. At par. Sweat equity shares issued to directors or employees shall be locked in. Not transferable for a period of 3 years from the date of allotment. Sweat equity shares issued to directors or employees shall be locked in. Means for 3 years from the date of allotment, it cannot be sold. After that, it can be sold. The sweat equity shares to be issued shall be valued at a price determined by a registered valuer as the fair price, giving such justification for such valuation. Okay, that's good. What will happen is, I told you now, 720 rupees market price, I'm giving you 500. You know how I will arrive at that 500? If I am the valuer, you know how I will say market price so much. I have done a PE valuation, relative valuation. I've also done a discounted cash flow valuation. Finally, I'm getting 600 rupees. Today, fair value. Market may be XYZ. Today, according to me, intrinsically, this share is worth 600. Market price 720. Triangulated or something. Finally, 600 is the market. But these guys cannot sell it for 3 years. So there is a lock-in. Therefore, non-transferability, I'll give a discount. And I will give him 500 rupees. Thereby, for these sweat equity shares allottees alone, the fair value is determined at 500 rupees. That's how we will do that. Manav Agarwal is asking, okay, sir, then what about promoters? Promoters will not come under sweat equity. Are you able to see promoter word here anywhere? No, not. A director may be a promoter, but we are not allotting to him as promoter. We are allotting to him as director. Okay. For valuable consideration. Promoter, simply if you want to allot shares, you allot. Who is preventing you from allotting here? You allot shares to him. Before public offer, you allot. Let him give money, you give him shares. Or if he gives some asset, please allot shares to him for consideration other than cash. But you cannot allot at a discount. If that is your question, no. Because where is the word? You are giving these shares not to him as a promoter. You are giving it to him for directors, as a director. And that too for know-how or IPR or value addition. So promoter, I've given you my best explanation for promoter. See, some of your questions, ma'am, If you elaborate a little more, I will answer more elaborately. What I'm now doing is, based on that one line, I'm thinking so much about Manav's mindset. How is he? He's a highly intelligent boy. So something he has taught. Based on that, he's asking. Don't make me double guess you. Be a little more elaborate in asking question so that I can answer your question. Now, my understanding, can sweat equity shares be allotted to promoters? No. But that would be a stupid answer, because where is your question coming from? You're thinking directors are promoters. No, sir. Promoter is different, director is different. A promoter may be a director. Okay. But here, sweat equity is given only to directors, not to promoters. Every word in law needs to be carefully used. Okay. Don't use words casually. Don't use words thinking that they can be interlinked and used. Sir, promoter is director. No, sir. Director is also may not be. There may be an independent director. He is not a promoter. There may be a minority director. He is not a promoter. A lot of directors are there who are not promoters. So now we go on to another interesting topic. Again, you might notice that this topic is closely linked with your financial accounting. So here we are talking about issue and redemption of preference shares. You already know about it. And you also know this is very fundamental. So I'm going to quickly run through it. Preference shares can be classified into different types based on these points. Based on dividend payout, where even in an year of loss, preference shareholders are entitled to dividend. Even in a year of loss, they are entitled to dividend. It is called cumulative preference shares. In a year of loss, the dividend will be calculated and accumulated, so that in a future year, when the profits are there, we have to pay cumulatively for all the years. Such shares are called cumulative. Whereas if this right is not there, in a year of loss, 3 vertical lines. Year of profit, money will be given. That is called non-cumulative. That is where for 2 years, if you cumulative or non-cumulative, 2 years preference dividend is not paid, then the preference shareholders get a right to vote on all resolutions. Actually, there is no such overriding link there. They have not used notwithstanding and all. Yeah. So, yeah, okay, agreed. I will question you. I will agree with you. That is easy. Yes, sir. 54 overrides 53. Because 53 only makes that blanket statement. No, shares cannot be issued at a discount. 54 is an exception. 54 is a specific situation that overrides the general provisions of 53. I will agree with you. That is easy for me. Yeah, you are right. You are right, Manav. You are right. Okay. Now, participation in profits. Meaning, we saw that preference shareholders will get a preferential right to receive dividend. That is, before equity dividend is paid, preference should be paid their dividend. First, they get preferential right. Now, then equity will be paid dividend. Suppose, after the equity is paid dividend, if still some profit is left, then participatory preference shareholders will get a right to participate in those profits. So I have made a profit this year, provided for all the expenses, audited, everything over, interest, depreciation, blah, 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 except dividend, everything I have calculated, tax also over. Now this is the amount available for dividend. That, if that amount is sufficient to pay right to convert their preference shares into equity shares. These are called convertible preference shares. Again, conversion may be fully convertible or partly convertible. That is, if the preference shares are 100 rupees per share, I might have fully convertible. That means for every one preference share, 100 rupees will get so many equity shares. Or it may be partly convertible. That is, one portion will be non-convertible, redeemed, 20 rupees. Balance 80 rupees, get converted. Obviously, at the time of conversion, I will take 80 rupees, which is the amount I have to convert. Plus, if any premium is there, I will add the premium also. and proportionate premium, and I will divide by the current market price of the share or by the fair value of the share or whatever. Okay, either whatever. If it's a listed company, then SEBI guideline will apply. And based on SEBI guideline, you have to see 21 immediately preceding 21 days average you have to take. And that average price you have to convert on. SEBI is given clear rules on that. You can, once you come to final, it will be your unfortunate duty to read that. Don't worry. By then, by final syllabus, how it will be changed, God only knows. Maybe SEBI itself may not be there. They will say company secretary is studying it. Why we should waste our time? I don't know. Okay. Whatever they say, final. Not final syllabus. That is the final. Okay. Now, redeemable, irredeemable. Irredeemables never redeem. Now, friends, in India, no company shall issue irredeemable preference shares. It is not possible. How possible? No company shall issue irredeemable. That is, once I will collect the money from the preference shareholders, never I will redeem. No. Preference shares should be redeemable within a period not exceeding 20 years. Okay? This is provided for in Rule 9. Right? But basically, it should be redeemed within 20 years. Maximum. You can have for 3 years also. 5 years, 10 years, 15 years, 20 years, whatever. But not more than 20. And if you want to have such redemption, you should redeemable preference shares. If you want to go up to 20 years, you have to have an authorization in the articles. Now, there could be certain companies where their gestation period will be very long, meaning the time taken from the date of incorporation and setting up of the project to when we will actually start making money, that period is called gestation period. Gestation means the time spent by the baby in the womb. That is called gestation. Now, so project gestation period means the project will become viable. The project will become profitable only after 5 years or 6 years. Infrastructure projects are like that because depreciation will be there, interest will be there. When you take out all that, or your ring road, bridges, metro rail, it take time now. See, by the time the metro rail is put in place, then start operating, then it should start making money. So in those cases, the gestation period is long. In the case of infrastructural projects. What are infrastructural projects? Clearly specified in Schedule 6 of the Act. Should you know it? No, you don't waste your time. Just understand, for infrastructural projects, redemption can be done up to 30 years, exceeding 20 years, but not exceeding 30 years. Even there, you cannot wait till the 30th year to pay. You should start paying 10% of the preference shares should be redeemed annually at the option of the preference shareholders. That is, once the 20 years is over, then every year 10% of the preference shares are to be redeemed annually on proportionate basis at the option of the preference shareholder. See, a preference shareholder may say, I will wait. Or he might say, give me money. The option is with him, not with us. Okay. See, whether to enter into a contract or not is not an option. It is a choice. But a contract may contain a choice, which can be exercised. That is called an option. Slightly. Now, we come to simple redemption. See, redemption of preference shares, in law paper, it is fairly simple. But when you come to accountancy only, there are a lot of journal entries. All that is there. So here it's very simple. Preference shares have to be redeemed out of profits of the company, which would otherwise be available for dividend, which means securities premium account cannot be used for redeeming preference shares. Okay, sir, there is no sufficient profit, but I have to redeem. What to do? Then you can use the proceeds of a fresh issue of shares made for the purpose of such redemption. So, if you want to redeem these fellows, get new fellows. If you want to pay these guys, get new bakras. Those bakras will give you money. Take that money and give to these guys. but you can't touch the existing capital of the company. If you have profit, well and good, which is available for dividend, instead of paying dividend, you're using it to redeem, we are happy. Sir, we don't have profit. Then, fresh issue. Now, when preference shares are redeemed, there will be a diminution in the permanent capital. Am I correct or not? Because reserves will go down. Am I correct? So, to that extent, there should be a replacement. So, what they say, once you are redeeming preference shares out of profit, when you are using redemption, when you are using accumulated reserves for converting preference shares, then the amount of the nominal value of the shares should be transferred to the capital redemption reserve account. Okay. The nominal value of the shares redeemed should be transferred to the CRR, capital redemption reserve account. Okay. Once they are transferred to CRR, they are not available for declaration of dividend. So why you are passing this entry now? What you are doing? You are debiting P&L account, debiting general reserve, crediting CRR. Why? Once you do that and push this into CRR, that amount later on when you come to declaration of dividend, I will tell you, you know what? If your profits of the current year are not sufficient, you can issue dividend, you can pay dividend out of accumulated reserves. Then we'll start looking for accumulated reserves now. It won't be there now because we have transferred it to the capital redemption reserve account. Thereby, we are locking this money into the permanent capital. So you cannot declare dividend out of this. You need not declare a dividend on this also. Again, to answer a question that was asked earlier, again I'm answering. CRR is not entitled to dividend. It is simply going to be there in the balance sheet liability side, capital redemption reserve account. It is not available for it will be there. Only thing you can, okay, sir, what to do with the CRR, sir? You can issue fully paid bonus shares. Just like security premium account, you convert it into equity share, then you give dividend on that. And if this fellow is a listed company, fellow is smart, he will go sell it and go. Let him take that share immediately, bonus share, immediately sell it. That is up to him, or he may not. For example, a company like Larsen and Toubro or Maruti Suzuki Limited, State Bank of India, I'm naming my portfolio. Point is, why will I sell? Yeah, I'm so happy. Salam ji, like that, I will say salam, 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 and I will take it and put it in my portfolio. And because my cost will get by half now. For acquiring the original shares, I have paid X now. Now it will be X by 2 now, my per share value. So I'm happy, or whatever, X by 2, or proportionately it will come down now. So I'll say, thank you, salam, salam, salam alaikum, and I will take the bonus shares. See, my Reliance shares came to that level only through bonus. They kept on issuing bonus. Dhirubhai was a famous man for that. Keep on giving bonus. And Mukesh also does it. Whenever he gets a chance, he'll give bonus shares. That way, Reliance has been a very, very investor-friendly company. Of course, some of you might feel that they are not good, they are unethical and all. Maybe you're right, maybe you're wrong. But investors love Dhirubhai, loved Dhirubhai, and I'm sure will continue to love Mukesh. Okay, now, to replace the face value of preference shares to be redeemed with the face value of fresh issue. So, boss, if you are going to redeem preference shares, permanent capital is going to remove. How to replace it? Out of profits. If you are going to replace out of profits, nominal value of the preference shares redeemed, you should transfer from general reserve or free reserves to CRR. Or issue fresh shares, that nominal value you replace it for this. Both can be adopted. It is not that only one you have to do. Partly out of profits, partly out of fresh issue. Okay? So there should be no... This one provision, you would have studied it in +2 or in, I don't know, CA, maybe in your accounting paper, the faculty would have taught you. Because he needs to teach you this theory to help you to understand the accounting entries and the ledger and balance sheet and all. So preference shares have to be fully paid. Authorization should be given by special resolution. Means the board cannot take this decision. They have to go to the shareholders. Nominal value of preference shares redeemed out of profits, nominal value to be transferred to CRR. We already saw that. CRR not to be used for payment of dividend. but may be used for issue of bonus shares. Beautiful. So since a lot of theory has been given, I know this sounds a lot like accounting problem, but still for clarity of, our thought, whether this donkey has explained it correctly, not you have understood, you're all brilliant, whether this donkey could correctly explain it to you. For that purpose, let us see this problem. See, that's why sometimes I use donkey word. Mainly I use donkey for me only. Donkey is Srikant, monkey is the mind. Imagine, monkey is riding the donkey. Imagine what can happen. So somewhere the donkey should control the monkey. That is the only way. Okay. It is a very easy question. This is not a CA intermediate level problem question. This is more a law question with a lot of numbers in it. So for a group of CA intermediate students, this problem could have been an insult if asked in the exam. If this is asked in your advanced accounting paper, it is an insult to you. See, immediately you all started answering. Chuck, 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 chuck. See, you have all really understood one important point. That is, any premium collected cannot be used for redemption. See, the 20% premium collected on the fresh issue cannot be used. Only the nominal value can be used. So 1,500 equity shares of 100 each will translate to 1,50,000. 2,000 preference shares of rupees 100 each, 2 lakh. So out of 2 lakhs, nominal value only you have to do. So 2 lakhs. The premium that you pay, at the time of redemption, that is not to be considered. That is separate. If that premium will be sitting in the balance sheet. If you want to write off. Otherwise, accounting standard, blah, blah, blah. You decide what you want to do. Okay. You do it, don't do it. That is your problem. I'm not interested. But how much to transfer out of profit? Only the nominal value. Means the balance nominal value is for the 500 preference shares of rupees 100 each. It's come to 50,000, which alone should be out of P&L. To the extent of the nominal value, we will transfer it to beautiful, sir. Now, another side. A reverse angle we will come in. What is the minimum number of equity shares to be issued? Absolutely correct. All of you are hitting it on the nail. I'm so proud of all of you. Seriously. I expect nothing less than that from CA students. Boss, you are the cream of the cream. Remember, once you become a member of my institute, remember, you are the Royal Bengal Tiger. Amongst the finance professionals, you are the leader. Okay, remember that. When you are there, other professions simply have to listen to you because you bring so much authority with you, so much knowledge with you. Never forget that. For also, yeah. Correct. Darshan, really too good. You are really great. I pray to God and look forward to receiving good news about your results very quickly. So now they are redeeming 10,000 preference shares at a premium. Forget the premium. 10,000 at 10, 1 lakh. Now, the balance in P&L is 60,000 and securities premium 10,000. Securities premium, ignore. You cannot touch it. So you are required to calculate the minimum number of equity shares to be issued for the purpose of redemption. If the new equity shares are 20% premium, ignore. See, that premium, securities premium can be used for writing off redemption premium if you want. Okay. But face value of 10 rupees. So How many new equity shares to be given? Already you are having 60,000 in P&L. So that you say you fully utilize. So you need to redeem 1 lakh minus 60,000, balance 40,000, 10 rupees each. So 4,000 equity shares. That's all. Okay. Rightly said. All of you have got it correct. Beautiful. Jasprit Ji has given detailed working. Excellent. Thank you. No idea of this. These problems are not meant to waste your time with such silly questions. But I know from an accounting perspective, this is a silly question. Okay. But think about it. I remember in BCom exam costing. See, remember, I'm preparing from a CA intermediate. And see, I know you know I'm a rank holder. So remember at what level I'll be studying. Okay. I'm studying from foreign authors like Biggs and Costing. I'm studying from Colin Drury and all. I'm working on problems with CIMA paper. I'm working CIMA level problems. CIMA level problems I'm working for our institute exam. And I go for my BCom exam. Okay. I'm not sorry. I'm unable to control my laughter. You won't believe I got 95 in that paper. In university exam, 95. Costing. What? Yeah. Process costing. No abnormal loss also. No byproduct. No joint product. Nothing. Only 2 process. Normal loss. I looked at the question. Hey, this is example in my book. Yeah. This is example. The first worked out example in my CA book. This is it. Imagine, I'm waiting. So I started laughing. The invigilator looked at me like that. No, sir, the question paper, I'm laughing, sir. Then I wasted 5 minutes laughing. Then only I started answering the question paper. That is university exam level. What to do? And this was 1986, 85. Now it will have deteriorated further. So how do we then manage? No, sir. Once they join, within 1 month, I will train them, sir. We will teach them, sir. So what the university has failed to do, Karpagam Krishna Natarajan has to do. In 1 month, 2 months, I have to take this gentleman, I hope I will not use the word donkey, gentleman, and make him into or a donkey, I have to make into a thoroughbred horse. I do it. Within 6 months, this boy to a girl who knew nothing, 6 months, she or he will become brilliant. We will teach them the principles and practice and we will take them on. But they can't become CA. But definitely in accounting, they will be above the cut. They will be extraordinarily good accountants. Pure accountants. Okay. Correct. Yeah, BCom, see, the problem with our educational system is they are going for literacy levels rather than preparing students for their life. So the goal of state governments is to produce literacy statistics. So, and one method of producing literacy statistics in India is graduation. Whereas in US, it is not graduation. See, yes, there in US or in Europe, US especially, Canada, US, children have to be compulsorily educated till O level. That is your equivalent of 10th standard. Compulsory. Then if they do well only, they'll be allowed to get into the next A level. And then if they do well, they sit for the A levels and they do really well and they major in a few, then only they can go to university and they will get seat in a college. So very difficult to get seat in university there. And most of these guys won't bother. After finishing his O level or A level, this fellow will join, say he will become a mechanic or a plumber or anything. He will become a stockbroker. To become a stockbroker, you don't have to get graduation there. You go for O level. You finish your A levels and then straight away go to a broking company. And then there they have certification. There it is a certification methodology. Including your CPA is a certification. CPA, unlike CA, you call qualification. No, it's a certificate. CPA is a certification. They are certified public accountants. That's all. So CA, so much importance given to CA in India. Na? If you go to US and say, I'm a CPA, they will laugh. Oh, you are a bean counter. They don't have big respect for accountants. Unlike, in India, where if you say you're just enter any social occasion. And you say, Mr. Srikanth, how are you? So what do you do? I'm a practicing chartered accountant. Oh, you're a chartered accountant. See, the respect level that is there in India, I'm not boasting. It will come for every one of you. The minute you say you're a member of our institute, Common people, they'll be, oh, you're a chartered accountant, sir, then you must be very intelligent. How they decide? Because the exam is tough. So if this guy has cleared the exam, minimum cleared, forget rank and all, minimum cleared the exam, he must be or she must be intelligent. This feeling we have created for our qualification in India. Okay. But abroad and all, CPA nobody respects. Fellow is a bean counter, yeah. He's called a bean counter. Where lawyer is respected. If you say you're a lawyer, a counsel, that is a different league altogether. And that too from Ivy League or from reputed law colleges, then your level is different. They are law, not CA. Or if you don't see here only that CA, we have created some big hype for it. There it is CPA. Okay, he's an accountant. Yeah, it's like that. So don't think CPA means something great. See, in the US, if you go and say I'm a CPA, don't think you will get the same reaction as you get for CA here in India. Okay. If you don't mind, if you don't believe me, check out with any cousin who is abroad. Just ask them, what do you think about CPA? CPA is an accountant. There, if you go to college, you do MS or you major in psychology. Psychologist. I'm also a psychologist, MSc in psychology. If I go to US and I do my doctoral thesis in psychology, that's it. I'll mint money. Sitting in my room, I will earn money every day. If I see 5 patients, it's enough. Fellow will come and cry his heart out. Then he'll say, your entire problem is because of your father or mother, as the case may be. That's it. So come cry on my shoulder. Yes, go. Pay $500 per sitting. Get out. So psychologist, CPA, no. Okay. Sorry to give you this unnecessary and irrelevant information, but check it out. Okay. Preference shares, issue and redemption. We saw that. Okay. Dubakur Limited has issued preference shares. Redeemable. Unable to redeem the preference shares or pay dividend on them. Know what to do. So Dubakur company comes to you, Dubakur Limited. So you say, okay, go back to those preference shareholders, obtain consent of 3/4 in value of the preference shareholders. First, 3/4 in value, not special resolution. No, you have to write a letter to all the preference shareholders and ask them to confirm, I agree. Like that, out of 175, 3/4 in 100, if the 1 crore, then 75 lakh worth of preference shareholders should agree. 3/4 in value. Then go to the tribunal and take approval. Then again issue further redeemable preference shares. Again redeemable within 7 years or 10 years or whatever. Okay, so the idea is you extend the time. That's why it's called Dubakur Limited. Okay, then forthwith pay to the dissenting. Suppose 3/4 agree. 1/4 are not agreeing now. They are called dissenting. To them, no, you have to pay. Or somehow beg, borrow, still pay. The unredeemed, how to pay? If you ask me, I can't answer, boss. How to pay? Maybe the promoters will have to bring in their own money. They have to beg, borrow, steal and bring it in and pay them off. Nothing can be done about it. And the unredeemed preference shares shall be deemed to have been redeemed. So it's coming due for redemption in September. I don't have money to pay. I go to the preference shareholders, make all of them stand, fall at their feet, Sashtanga Namaskaram. Then I tell them kindly accept. If 3/4 agree, fantastic. Go to the tribunal, apply for approval. Tribunal says, get out. I approve, go. Then you come. Now what happens? From September of 23, you extend it to, say, September of 28, 33. 10 years you push. And you say, come on, bye, meet you in September. Hope to pay the dividend by, like that. But out of that, preference shareholders, if some fellow says, no, Dubakur, I don't agree, then to them you have to pay. The balance unredeemed fellows shall be deemed to have been redeemed. Okay. If any persons have not consented, then the tribunal will order the redemption forthwith. Forthwith means without delay. Forthwith means without delay. Immediately means at once. Immediately means at once. Forthwith means without delay. Without delay. Slight difference in words. Immediate and forthwith. They say immediately means immediately. I close my eyes and open, it has to come. That is immediately. Forthwith means as soon as possible without delay. Slight difference. Sometimes I call somebody in my office to my cabin and I say, I want that file immediately. Then I will close my eyes and open and say, you're still standing here. Where is the file? That is immediately. Forthwith means without delay. Now, we have come to another excellent topic, which is transfer and transmission of shares. If you have any doubts up to this stage in preference shares, you can kindly ask me. Also, since we have to go on till 8:30, let us have a small break. Topic, we are changing topic now. So let us have a small break. Okay. So, any other doubts, anything you can ask. So the time now is something like 7:58 or so. 8 o'clock, max 8:05. Max. Upper limit 8. 8 o'clock, I want to start. Max 8:05. Sir, break, sir. Friends, welcome back from your well-deserved break, and we'll move on to another topic, which is called transfer and transmission of shares. Friends, from 7:45 onwards, I have not received any comment or any question from any of you. I hope you are there. So, yes, Darshan, Patanjali Foods launched QFS. Okay, agreed. Good. I'm happy to know that. So, good. Patanjali Foods launched QFS, quarterly financial statements, for the shares held by its promoters group. Agreed, sir. They are really great people. Okay, we agree we agree that they are great. I don't know. What is the use of this information to me? Nothing. So I will not bother about it. This is my philosophy of knowledge acquisition. If it has any value, I will remember it. Otherwise, I will not waste my time. Okay. That's why, can you imagine 57-year-old man, financially successful, 600 file practice, Chennai May. I got branch in Madurai also. I'm a corporate trainer. All that, you see my biodata, you know. I don't read newspaper. I do not read newspapers. I do not look at these news feeds and all that blah, blah. I do not. Enough information is available to me for taking decisions. I don't have to be up to date on everything that's happening around me. Everything, if I keep tracking, remembering and all, unless I am writing GK for IAS officer, which I am not going to do. I am not going to write general knowledge for IAS. In which case I will do. If at all I decide to IAS, then everything I will know. But I am a chartered accountant. I know enough is enough. In fact, the other day, my partner's wife, she always said, Srikanth sir, in budget, they are telling something. Can you give me your view? I said, I'm not watching budget, madam. I'm now in Kodaikanal. Enjoying it. Sir, you are not watching budget. No, sir, I'm not watching budget. What you will do? Madam, that budget has to be passed in parliament. Then it has to become act of parliament. A long time is there before it will impact my client. By then, I will know enough about it, more than anybody here. And I will be able to interpret it also. Sitting in front of the TV when that lady is reading budget, I don't have to know anything about it. Okay. And none of my clients also interested in such fast reaction. Okay. If at all somebody is asking me question, he is useless fellow. Simply sending message, sir, what do you think? What do you think? I think nothing. Let it become act. Then I will understand the section. Then and only then I will advise you. Till then I will, based on what they are reading in the parliament, I will not give any advice. I know this sounds a little funny. That's also a different attitude. Never bother about anything. Don't waste your time reading newspaper and also you study your institute material. That is more than enough. Okay. Little bit be aware. Little bit be aware. But don't waste your time every day knowing everything that's happening immediately. See what happens now. Knowledge is of two types. Acquired knowledge that is accumulated and immediacy knowledge. Most of the time, today's internet and today's, the whole media, they push things to you which are immediacy effect. They have no value in the long run, but attractive in the short run. So we waste our time reading this. We don't have time to read the important things and which has to be accumulated and remembered, like principles, concepts, fundamentals. We don't have time. So we simply read what is going on, get attracted by that. So this is not about darshan. It's to all of you there out there, people who are below 40. I'm 57, 17-year gap is talking to you. Please do not waste your time reading news, and especially pushed news that is being doctored and sent to you. That is further danger. Earlier, at least, when I read the Hindu had no ulterior motive to connect me. But today, everything that you get, there is an ulterior motive there. I'm not joking. So, be very, very careful. See, my 3-year-old daughter is being exposed to Kidopia. She is being exposed to, what is that? Netflix for children, something YouTube Kids and all. Everything that I see there, I'm seeing mass marketing. I'm seeing this child is being made to see some toy. And that adult is coming and showing them how to play with that toy. Now their mind of this child is being conditioned to buy that toy. Now, she has a rich grandfather who will buy for her. But not every child may have. So, in a commercial economy, every bit of information is marketing oriented. So don't waste your time reading. Of course, there are some sites, far be from me any intention to recommend. Our institute's BOS portal, yes, you should be accessing every day and going through using it. You make maximum use of the BOS portal. And if you want, be connected to professional portals like, I'm not recommending, I'm not saying it is good, but I find Tax Guru has some relevant articles because Tax Guru is now becoming a knowledge base of professionals, like say company secretaries, chartered accountants, including my good friend from Madurai, a very senior chartered accountant, Mr. Lakshmanan. He writes articles in Tax Guru. So it's semi-pseudo-professional, semi-professional. So to an extent, even there, be careful. All nonsense also goes on there. So all nonsense also people are writing there. So just be careful while using such sites and all that, but somewhat useful for from your exam point of view. Thank you, Darshan, for taking it in the sportive way. I am talking all irritatingly. I'm telling things which many of you may not like. But what to do? Things we like and things we need to know are totally different. What I like is different from what I need. So throughout my life, I have gone for what I need rather than what I like, what I want. What I want, no, what I need. God gives me what I need. I only become upset because I'm not getting what I want. But God gives me what I need, for which I thank Him. So that is the attitude of Prasada Bhava, we say. We call it Prasada Bhava. Everything that He gives is Prasadana. See, when I was born, at the time of from my mother's womb, when I was in her stomach, my right hand got, the umbilical cord got twisted, the right hand, and my right hand become like this. You can't see, like the length is less. It's no problem. When I got All India rank in CA Inter and final, my own effort, no, that is also karma only. This is also karma only. So when I got rank, I say, thank you, God. But God, I did my work hard, therefore I got it. But when my hand is like this, I go to God and ask, God, why is my hand like this? They're only God. They're also my karma only. Okay. So it is my karma only what made me what I am. Okay. So God is smiling always. That's called Prasada Bhava. Good. God gives good, smile. God gives bad, smile. Everything He gives to us, He gives with a purpose. He knows what we need. We only bother about what we want. Okay. So today a little bit philosophical thoughts are being shared by me. Kindly bear with me. As a senior in the profession, I'm telling this. So don't worry. Bhagavan will give you what you need. Allah will give you what you need. God will give you what you need. I have 100% faith in Him. He's doing it. Okay. Now moving on. Transfer and transmission. Though alag-alag sabd hai na? Correct. So they must be having alag-alag artha also. Yeah? Correct. So transfer means change in ownership of shares through sale, exchange, acquisition. Meaning parties, by act of parties, by volition, it is happening. So I decide to sell my share to, and I sell, he buys. I decide to give my portfolio partly to my son and daughter. That is through settlement. That is transfer. I am alive now. It's transfer only. Except that it is being done without consideration to my children as a gift. No problem. Okay. I'm giving it to my children as a gift. So on 56(1), it is exempted because they are both my children, so I can give. Like that. Now, the point I'm making is this type of act of parties ka exchange of ownership, change in ownership is called transfer. Transfer is evidenced by instrument of transfer for physical shares. For DMAT, nothing. Simply inform to the depository, that's all. To the DP, depository will inform the company will note it. That's all. Daily it happens. Transfer continuously it happens. Transmission means change in ownership in shares. Transmission means change in ownership of shares due to death, insanity, insolvency. That's why I said I'm still alive now. So in vivos, when I am alive, when I'm intra vivos, I am transferring my shares to my children as a gift. That is transfer. But then I am not alive. Then what happens? Automatically they will get it. By process of law, by operation of law, they will be my legal heirs. My wife, my 2 children, first level, second level. If my parents are there, they will be, my mother is of course no. Whatever. See. So the point is, operation of law, they will get it. That is called transmission. That's a slight difference. Similarly, I become mad. My wife is telling, I am already mad. All it needs is she has to make an application to the, I tell her, if you honestly believe that I am mad, no problem. Go to the Madras High Court. Your son is an advocate now. He is been admitted as a member of the Madras Bar Council. First case, let him file insanity of father. Then on those grounds, let him take divorce also. Let him get good experience also, I used to say, jokingly. Thereby proving that possibly I'm insane. So whatever it is, the only difference between me and a madman is that I'm not mad. Famous dialogue by a surrealistic painter called Salvador Dali. Dali said, the only difference between me and a madman is that I'm not mad. Okay, so whatever it is, if you also suspect, but who can file? You can't file. Only my legal heirs can file. They can say my father has become finally mad, finally confirmed, certified mad. So please kindly declare him as insane. Then immediately the court will talk to me. After two minutes, the judge will know, no, your father is insane. No, judge cannot decide. Only a psychiatrist should give a certificate. Maybe they will give a certificate after talking to me. There's a test of sanity is there. Don't think that if I talk like this, I'm insane. Okay, there's a test of sanity is there. Once that sanity test is taken and I'm failed, then they will say he is insane, certified insane. Then court will pass an order. From that day, I will have no control over my property. My property will be controlled by my wife or my son. Who will have control? The court will tell who will have control. Then that person will have. Usually blood relative will have. Like son or wife will have control. And that's it. Srikanth will be locked up in a room and that's it. World will be safe thereafter. That is one example. Another is insolve. I have given you the legal process of insanity. Don't think that simply because somebody is mad, you can tell insane. The court has to give a finding that the person is insane. Only then legally insane. Only then the transformation will happen. Why I'm giving this elaborate story is because you should understand. Simply, sir, he's become mad. So his shares are mine. If the son says, no, Baba, please show me the court order. Your father has been declared insane. Show me. Then we will talk about it. So transmission is the operation of law. Insolvency, of course, we're unable to pay the debts. Obviously, that example I won't give for myself. 200%. You know when? Why? Because my grandfather taught me. My grandfather, today a little bit I'm in a chatty mode. And we are going to complete the syllabus well within time. Don't worry. My grandfather, when we used to eat, now we used to go to marriages. In South India, they'll serve feast, marriage feast and all on a banana leaf. And all sorts of items will be kept. My grandfather will say, Srikanth, when we get up from the table, our banana leaf should be clean. Nothing should be on it. Initially, I didn't understand. Because what will happen when I see one item, I want jangri, I want badusha, I want this, I want that, I want potato curry, everything I'll put there. And then at the end of the meal, I'll be struggling to eat and finally waste it. Whereas my grandfather, he will only take things on his leaf which he wants to eat. So the secret of not wasting and giving a clean leaf, because my grandfather come from a poor village. He's from a small village in Tamil Nadu. He's come to Chennai and he became a school teacher, and my father and me. So we come from a very lower middle class. You can say poor background. My 3 generations ago, we were poor. Okay. My father, lower middle class. Then slowly he became upper. Then slowly we became. So we know the value of money. My family, we know. So my grandfather told me every meal he has struggled. Without meals, he has struggled in Chennai. So he says, never waste. But the secret of not wasting is not putting. So insolvency happens when a man lives beyond his means. When a man keeps borrowing money to show off, even to build a business, without knowingly you put into wrong business and then you borrow money, we insolvent. So that is the thing. So at the time of setting up of the business itself, at the time of planning the activity itself, you have to be clear what we need, what we don't need. Then automatically you will be only solvent. This is the secret I learned from my grandfather. My grandfather never borrowed any money. My father borrowed to build assets. I also borrowed to buy assets. never to support my expenses. For expenses, only income. If you don't have income, don't spend. If you don't have the money, don't spend. Then you never. So such a person, it will be impossible for him to become insolvent. Okay. So, but still, suppose somebody is unable to pay the debts, he becomes insolvent. Then what happens? The creditors will file insolvency petition. At that time, all his assets will be taken over by the court, and it will go to the official receiver or assignee. And that official receiver or assignee will become the owner of those shares, control of those shares. So this is called transmission, and it is done by operation of law. Don't say need. Transfer is choice. I'm totally with you on that word. Don't say need. Transmission is by compulsion, you can say. By compulsion. That is why we say operation of law, where you cannot disobey. I don't know what Aisha is telling. Wealth is what we did not spend with money we did not have. Okay, agreed. That it's a very, very, very philosophical statement. I will say that statement and keep it for further contemplation. Wealth is what we did not spend with money we did not have. With money we had, but maybe there's something more inner meaning is what Aisha ji is telling. So I will contemplate on this today and try to get new meaning out of it. Chalo. Now, transfer and transmission of shares. The preconditions we are seeing here. See, we are always talking about physical share certificates. For dematerialized shares, there is absolutely no form, game, nothing. That process is very, very straightforward and simple. Online, you sell your share through your broker. That day, your DP account, or that day minus +1, T+1 delivery. Next day, your DP account will be cleared by your broker through the POA, or he will ask you to give depository DP, your depository advice. That will go to the depository. Then that depository will take your account and automatically debit, means remove that share from your account. And whoever is the other guy, the buyer, his DP will be informed. Then that DP through his depository, that will be over. Then this depository is there. He will inform the company that so-and-so has sold and so-and-so has purchased. Now the new member is B, old member is A. That's all. This information will go to the company, or the company will appoint an agency. The company will appoint a service provider called share transfer agent. Share transfer agent. For example, you might have heard of companies like Cameo, CAMS, Carvey I think now gone, Carvey. A lot of companies are there. Their job, including Tata Consultancy Services, their job is to maintain the register of members of the company. So if a listed company has hired Cameo, that Cameo company will maintain the register of members of those listed companies. Meaning, so they will have a direct leased line link with NSDL and CDSL. So NSDL, CDSL, there will be a leased line, heavy, directly from the NSDL, CDSL, we will get into a dedicated line so that there cannot be any hacking, anything. It will be physically controlled line, okay, with the sheath. So impenetrable, very difficult. It's not, I'm saying non-hackable, but the hacking required should be, the firewall will be very powerful. And that too directly leased line, it will come here. So the data will come directly from NSDL and CDSL to the share transfer agent. Then the share transfer agent application, the program, they will have powerful application program that will take this data, dump it into the database, and then from the database, it will make the necessary transfers and all. The end of the day, one register of members report will be printed and sent to the company like that. So whenever the company has, once in a month or so, they'll have share transfer committee meeting. All this will be informed and approved post factum. So this happens continuously. So for a dematerialized shares, this is a totally different story. In fact, I have done IS audit of these companies. as I'm a certified information systems auditor, they need to be, SEBI needs them to be audited by a CISA for IS audit, logical security, physical security. I have done all that for some of these companies. Why I'm telling this now? It's a totally automated process. No hands off. Some employees will be there only for printing, monitoring it, application development, and maybe just to handle some queries and all from shareholders and all. Otherwise, the processing is completely automated. So for dematerialized shares, don't worry. But for non-dematerialized physical shares of unlisted companies, private company, public company, it will be in form SH4, duly stamped, dated, and executed by or on behalf of the transferor and the transferee. Both transferor has to sign, transferee has to sign. Now remember, I said shares are movable property. Now we are saying form. I told you now, this form is not for transfer. See, when you buy an immovable property, you have to register a sale deed. Otherwise, your ownership title, there will be no document. Like that for shares, there is no title document and all. The certificate is that you give the certificate, the end of story. Okay. So that is why shares are movable property, whereas land is immovable property. Okay. But still this form is there, not for evidencing transfer or title. This form is not an evidence for transfer of title. This is an evidence for change in the contractual relationship. The transferor is now going out, transferee is now coming in. So the transferee is now applying in writing to become a member, and his name will be entered in the register of members. Now he will become member. So transferor will cease to be a member, transferee will become a member. So in that form, you have to give the name, address, and occupation of, if any, occupation, if any. I mean, address also, if any, okay, of transferee. Delivered to the company within 60 days from the date of execution. So the life of form SH4 is 60 days in there. That is why many companies say, Shrikant, can you do predated transfer? 60 days, do whatever you want. It is you and the company secretary, between the two of you, you do any nonsense, come to me. 60 days is the limit for all this. Beyond that, I cannot help you. Earlier, it used to be 12 months. Now it is 60 days. You have to register. Okay. Along with the transfer form, you have to give share certificate. If there is no certificate, then at least letter of allotment, etc. Now, let us see this and then we'll take it up in the next class. I'm giving this as one of the examples only because the calculation rule I want you to know. The original allottee, rather the original allottee of 2000 shares in Murthy Mechanical Toys Private Limited has transferred the same to Ruchi. The instrument of transfer dated 21st August 2020, duly stamped and signed, was handed over to Ruchi. Advise Ruchi regarding the latest date by which the instrument. If you remember, 60 days from the date. For calculating 60 days, do not include the date of execution. So, 19th November would be the September, October. 20th October would be the answer, right? That is August. The transfer is happening in August. So, August. So, we should not include 21st. And remember, August has 31 days. Okay. So, you have to count days. When the difference is given in days, when the period is given in days, you have to count days. Suppose they said 2 months, then automatically it will be 20th October. But here you have to count. You should not include 21st August. Then you start counting. In August, how many days? September, 30 days. Then October. Remember, August has 31 days. That is why it's coming to 20th October again. Okay. Point you should remember is, you should not include the date of execution. Again, Kavita ji is asking a very nice question. In case the transferee is already a member, still this will inform the company that he is now entitled to 100 more shares. We are informing the company about it. That's what it means. If he is already that member also, agreed. we won't waste our time preparing one more registered folio for him. But we have to acknowledge that his right is now increasing by 100 shares. That will be acknowledged. Good question. Good question. Yes, C is the correct answer. Fantastic. So we have had a good day. We have done up to here. In fact, next class we will finish transfer and transmission and go on to hardcore subjects like rights issue, bonus issue, rights issue, reduction, buyback, blah, 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 we'll do. Then finally we'll end up. Okay, this is the plan. Good show. Have a great evening ahead and enjoy yourself. Bye. Yes, sir.